Good, Mary. Good to see you.
Good to see you again. Great to connect with you. How are things over there?
Likewise. Good, good.
Fantastic. So, to our new followers, I'm excited to have Gil Figueroa from First Commercial Capital back joining me, this time via Zoom on a quick Zoom recap. I just won't leave you alone, Gil.
Good. I'm glad.
So, Gil, you were featured in one of our very first episodes on Landlord Coffee Talk, where we discussed a case study on our client Steve's resetting loan. We actually got a lot of views on that. That was great. Yeah, it was
Good.
awesome.
Good to hear, Mary. That's fantastic.
So I thought it'd be perfect timing to bring you back to share your insights and provide us with a forecast update. Now, lot has happened within this last year, and given that you're very highly experienced in commercial loans, I kind of want to dive in and pick your brain and see like what's to come next. So you ready?
I'm ready.
All right, awesome. Okay, so one thing that's been on every one of our investors' minds is with the elections behind us. So it seems to me that the Republicans have gained control of the presidency, Senate, and now the House. While I'm not sure if how much of a political party impacts interest rates, um, like what kind of I'd love to hear your perspective. Does any of this matter going forward as far as political party, how much of control it has? Does it any of that matters for interest rates?
Well, the positioning of what, the new administration is doing and the tariffs and so forth, potential tariffs. So that can cause, short term, some inflationary pressure.
Okay.
And I think the market is already kind of forecasted that.
Hmm.
If we go back to our last big Fed cuts, which happened in September 15th, the market's actually bumped up almost a full percent from a 3.6 treasury to a 4.5 treasury. Now, recently in the last couple of weeks, we've dropped to about 4.1. Um, so we're a little lower, but I think what's happening is the market is thinking that there is still going to be some inflationary pressure and that not too many rate cuts are forthcoming.
Okay, so that brings me into my next question. In your experience, what do you anticipate for interest rates over the next few months and years to come? If I'm not mistaken, like you said, the interest rates within this past week or so did drop this past November. So do you see that as a trend now going forward, dropping interest rates or not yet?
Yeah, based on my analysis, and I'm a technical trader. So my training, what I see is that today we hit a pivot actually. So that means that could be a marker for rates bumping off this pivot and moving forward.
Mm.
Now, if we drop below 4.1, we have a chance of getting as low as 3.9, maybe even 3.8. If we do surpass that and pass 3.6, which was our low back in September, then we could see, much lower rates. That's not what my chart is telling me. My chart is telling me that we're probably going up. It's not what we want to hear. It's not what I want to say either. I rather they go down, obviously, for all of us. But I see rates moving up, and I think this is a time that everyone should be very close to their professional realtor, like your group and Sean,
Mhm.
and that way they know exactly if the rates go up, they have to have a game plan, you know, because if they do go up as aggressively as I think they could,
Okay.
um, there are adjustment periods that are forthcoming on those folks that are adjusting. It's going to be a very aggressive adjustment, and they need to be prepared.
Right. So that's sort of what you're forecasting in the future. Now, let's say going back to our Steve's case study where he had that resetting loan. Let's say we've got investors that are having to reset their loans, not now, but maybe in about a year or two. Would you suggest they start actually looking into locking in new rates now, or should they wait until the 2 years is up and then look into this, being that
Yeah,
you're
I wish my models can go off that far.
right?
If they did have just be trading bonds on an island, wouldn't have to work too much. So I'm not there quite yet, but I can't go that far in a
Sure.
forecast. I just see that if we continue this upward trend, we're going to be higher than a 5-year treasury. 5% treasury. I'm sorry, 5% treasury. So
Okay,
I do see that potentially breaking here in the near future.
I see.
Um, I don't see it moving on because I don't believe the market itself with the debt and GDP not being that strong and potential inflation. I think there's going to be a pause in that and there could be a drop in the future. But the question is when, right?
When, right.
So right now, what I would do for your viewers that are going to be adjusting in the next 6 months, a year, I think they need to look at what this scenario is today, keep an eyeball on it. In other words, keep their hand on the finger and see if it makes sense to trade this today as far as a refinance,
Okay.
or if they're really underwater, so to speak, on debt service and they have to come up with dollars to refinance, maybe the better tool would be to sell
So,
and exchange. But that conversation needs to happen now.
yeah.
And you got to have a game plan. You got to, talk to Sean, see what your numbers look like as far as your valuation. You got to prepare for a worst case scenario. Now, if rates shoot up and then they come down, then fantastic. You weathered the storm. But
Mhm.
my point is prepare for the worst, hope for the best. The old, the old motto. But you have to really prepare because, if we go to a 7.5 or an 8% rate and
Mhm.
your previous note rate was 3.5 or 4, that's quite a difference.
Okay.
So that's going to create some, dollar losses there on the loan amount and cash flow issues.
Right.
So they really need to pay attention to the situation.
Absolutely. So great advice. In your experience, based off of the chart that you have, you feel that it will continue to rise interest rates, that the followers that we have today must stay proactive and really consider valuing their building, reaching out to their realtor, reaching out to their finance experts, and really coming up with a game plan of what's to come in the next year or two with a possible resetting loan in their forecast.
Yeah,
So,
if their loans are due, like I said, between
right,
6 months and a year, they need to have a game plan.
they need
They
to have
really do. Because right now, what we're seeing is, rates either staying in this range around 6.5, 6% to 6.5 to going up to 8. So
it.
that's going to be their trade range. They need to run the numbers on that
Mhm.
and see where they fall. And if they have to, recast the loan and come up with more dollars to do so because of the debt service issue,
Right,
they need to know about that right now instead of being shocked when their loan is due.
right.
So I would, reach out to me and Sean as
Yep.
far as both these situations to get an idea what the loan can look like and get an idea what the evaluation would be.
Awesome. Well, this is great information, Gil. Thanks so much. To our followers, I'm going to put our information for you guys in the description below. Be sure to reach out to us directly. We'd be happy to guide you in all the right directions we can possibly do on our end. So fantastic. Thank you so much, Gil.
Sure, Mary. Thank you. Thanks, Sean. And another note, if you have anybody out there that actually reaches out and asks for an evaluation or for me to
Sure.
evaluate their loan, I'll share my interest rate chart and my pivots with them so they have an idea of what I'm looking at as well.
Okay, fantastic. Well, you heard it, followers. He does have a copy of that interest rate chart that he'd be happy to share with you. Be sure to reach out, direct message, DM, text, phone call. We're just a hop, skip, and a jump away.
Perfect.
Awesome. Thanks, Gil.
Thank you,
Okay,
Mary.
we'll see you soon.
Take care.
Okay.